Hello friends, welcome back to my channel. I'm going to basically be showing you how to take the swing trade on daily time frame using Trendline Break. So what I'm teaching basically here is momentum trading, where we use a Trendline Break and we take trades based on a trend line being broken with huge momentum or momentum that is definitely larger than what we normally have. So, for example, KPR mills. So, if you see here that the price has gone up and it's crisscrossing the 20 and the 50 EMA, and then there's a swing high, and then you have lower highs and lower lows, and the price is coming down. So, let's say we were somewhere here, we were observing it somewhere here, end of January. So what we would see is that the price is going down. We have got lower high, lower low, lower high, lower low. So what we would do is we would draw a trend line. You would basically draw a trend line here, and what I've done basically is taken the maximum number of touches that I can, and we are basically waiting for a trend line breakout. So what we see here is that we do have a breakout here, and the breakout has come on volumes that are, if you see, the volume is 718K, which is almost 3 to 4 times the volume, the 20-day volume, and we have a trend line breakout. So if you're waiting for this breakout, you what you would do basically is you have this trend line here, right? And this day has already passed, and we have not broken we have not basically gone above this. So what you would do basically here is we haven't gone above the 20 EMA, so there's no point going long here. It doesn't make any sense because you're on the 20 and the 50 EMA, and this candle is frankly just crossed the 200 EMA candle. So what you would do basically is that if you see if you don't look at the candles here, right, and you are on this day, say on 23rd on Feb, and this is your 26th Feb candle. So you would basically you will basically keep a price and entry point of say something which would be above the 20 EMA. You can even wait for this candle to close and take a trade, or you can just basically if you've been observing this candle while you were in the market and this candle has gone up, and of course there would be intraday movements, you could simply, once the price crossed the 20 EMA, and if you want to be aggressive and don't want to wait for the candle to close, you would basically have a buy point here. Just give me a second. Horizontal ray, where is the ray? Just give me a second. This one, yeah. So basically you would go long somewhere here, and I'll just remove this line and I'll color this green. This would basically be uh, your entry point, and let's make this green, and you could have a stop loss say somewhere around here. So what we can do is have some stop loss here, some logical point, and what you would do basically is this would be a stop loss, and If you see here, this is basically a trend line, but it's also kind of a descending triangle also. If you look here, this looks like a trend line break, but it's also kind of like a descending triangle. Now you see, once I draw this horizontal trend line, you see that sellers are willing to sell at every portion. Normally, in such type of cases, you would have the price breaking down because this is a descending triangle. The price goes up here, here. Prices come here and bounce much before touching it here because of the 200 EMA is respected at that. Come back again and up here. Now sellers are willing to sell and they are absorbing everything. They're selling. Normally, this is a kind of descending triangle, and though it can break out in any direction, chances of it breaking down below are reasonably high. But here is broken to the upside. So you've taken a trade here. This is your stop loss. And as of now, you're still in the game. Now, this stop loss is based on your risk capacity, your position size, the type, the way you like to trade. You can either bring it up or you can bring it to this level or a little below, up to you how you want to trade. If I was trading, I would keep it somewhere here. Now we are not getting particular into what's the percentage, is it enough, looking at the ATR and other factors, but just to give you a general idea on how you should not have too wide a stop loss because then your position size will come down. And if you basically want to maintain your risk reward ratio, if you want to make a good R multiple, you need to have a decent stop loss, neither too small nor too big. Too big and 1:1 is going to be a problem. Forget 1:2. For example, if you have a 10% stop loss, so 1:1 is 10%. 10% may take many days, if at all. Price may go up by 5% and come back down. And it may take 10, 15, 20, 30, 40 days to hit 10%. Or it may do it in 3, 4 days. You never know. But even if you get 10%, you have 1:1, which is a really stupid way to trade. Your minimum R multiple should be 2, if not more. And so that's the reason you should not keep a huge stop loss. Now, if you keep too small a stop loss, like you want to, increase the position size by reducing your stop loss so that you can take more trades, you would keep it somewhere here. You just got in here and you kept a very small stop loss, right? Just 30, 32, 33 rupees, and there your stop loss is hit, and price is likely to go up in the direction, and you're out of the trade. So don't keep your stop loss too small, don't keep it too big. But then again, it is your choice. We are talking about swing trading here, not talking about positional where you need to keep a 10, 15, 20, 30% stop loss. And even in positional, if you keep that much, all the best to you because you're going to really need it. You're going to be wiping out your capital many times before you come to the correct conclusion on how to trade markets. Let's go to another chart. We've got latent view here. Now, latent view, uh, let's look at where we have a trend line break here in latent view. Let me examine the chart. So, latent view, we are going to draw a trend line here. We're going to get the maximum number of touches, and also it should be logical. Just because you want maximum number of touches, we don't do it like this. That's just stupid. So there has to be some method to your madness. So if you see, I'm getting as many touches I can from this rally based drop here, and also getting the wicks here. Now I can extend this to something like this here, and what you will notice here you have your ascending triangle. Although I am teaching you trend line break, right? This is a trend line breakout, but it's also ascending triangle. Now, what is ascending triangle? Give me a second. Let me increase it here. Yeah. So, what is ascending triangle basically is where price is in an uptrend, but price consolidates between two places, and sellers are trying to sell, but buyers are not willing to bring the price down beyond the point, and they're fighting back. And ultimately, they have broken through with this huge volume. Can you see this huge bar? And you would basically, although this is a continuation pattern and this is an ascending triangle, although in this video we're just talking about a trendline break. Trendline break should be accompanied by huge volume. It should at least be above some, whether you're following the 10-day, 20-day, 30, 40, 50-day volume is up to you, your style of trading. But it should not be normal volume where you just have a mild break with average volume. What will happen is going to be a false breakout and the price may come in. It may or it may not. There are no guarantees here. There's no holy grail. But the reason why we look at price action is price action should be accompanied with a study of volume, because that will give more probability to your trade. Now, this is an this is actually this is actually a descending triangle here. If you sorry, I said ascending earlier, my mistake. This is a descending triangle. Now prices are coming down, but buyers have fought through. And although this could have gone, had it had the price gone up and down here, chances would have been that the price would have gone up, uh, would have basically come down here, because it's a descending triangle. But the overall trend, if you see, is on the upside. So because the trend is on the upside, you have a huge breakout. And whether it's ascending or a descending triangle, mostly they're continuation patterns, but the price can break either way. So you basically need to be prepared for it to break up or down. And since I'm trading swing and in equities, you can't do short swing trading. You can do that only in futures or in options. So we are going to be looking only for longs here. So what we have here is we have a break, and I would have taken entry here. I would have taken entry somewhere here. You will say, can we take an entry here? Yes, we can, but give it some breathing room. Don't be so stingy. A rupee or a 2 rupee here and there is not going to stop you from buying your next luxury car. So I'll take an entry here, and I'll color this green because this is our purchase price. You can write whatever purchase price you want here, and I'm going to put a stop loss somewhere here below this candle. Below the low of this candle, I'm going to put my stop loss here. And I'm going to make this red, because red, nobody likes red because it's the color of blood. And if my stop loss is hit, I'm not going to be happy in jumping around. So that's the reason we use color red. Of course, it's up to you. You can keep it orange here and blue here, whatever basically makes you happy. Now, we have taken this because there is strong volumes, but I'm not going to be sitting in the market like a Dumbo, watching trend line breakout, because this price could meander here and there inside this triangle, descending triangle, for the next 5, 10, 15 days. So I can keep a purchase order here, a GTD order here beforehand, and not bother also looking at the market. And if it gets triggered, see, I've kept it outside. So price has to go up to this level for my order to get triggered. Now, of course, there's a possibility that it's an intraday spike, it goes up and then it comes down. But then, if that happens, so be it. There are no guarantees, there's no holy grail, right? So, instead of being unless you are into intraday trading and a full-time stock trader, you don't want to be, wasting your time looking at the charts, because these charts you would have viewed before the start of a trading day, and you've identified your key stocks and where you want to enter, where the price action is looking good. So I placed this order here, and once that hits, uh, even if you're at work or you're doing something else, you will get an alert on your mobile app that your order has been triggered, and you have already taken a photograph or noted down your SL and what is going to be the target here. Now, you can have a target of 1:2 of your SL, or you can have a target here of Just a minute. I'm going to delete this here. You're going to have price range, and you can have a target of something like this is your target from the break. So I'll do what I'll do is I'll keep it here, and this is my target. So I believe my target is already hit here, and I would have kept a one cancels another order here. And again, I don't need to look at the market. You just need to authorize your app to sell when either your stop loss hits or your target. That is, if you have decided to keep a target for the entire quantity. If not, you can always choose. This is probably around 27%. So this is already, I think, 3 to 4 or 5 times. So that's good enough for you to sell your entire quantity. But if you're still not satisfied and you want the moon, then you can, of course, offload 50 or 75% of your position size, and the rest you can trail or bring your stop loss to even or whatever, whether you want to keep it at a swing low or at EMA or ATR based stop loss, totally up to you. And then you can trail here. So we would have hit our target here, and then price is coming down and prices come down here, and price takes support here because there are multiple touches. So this kind of is a resistance that has now become support. See these touches here? You have one, you have a two, and you have a three here. And so price is now opened up gap up. So now, and RSI is also showing a cut through your EMA 14 here. So anyway, so this is for the trend line break here, and I've got another chart just to show you something. Now, most people will not show this to you. So most people will not show this to you because if like I'm teaching you a pattern, then I should show you that it works, and it works definitely because of course these are cherry pick charts, but I don't want to do that. You must see what happens in the market. If you're already in the market, you already know this, but if you're a new aspiring trader, still learning, or you are an experienced trader, but you have an open mind and you want to keep learning and you say that I'm a fresher with 3 years, 4 years, 5 years experience and I'm eager to learn, then uh, this is for you as well. Otherwise, it's just for newbies. Now, normally when people are teaching any pattern, they're just going to show you profit, profit, profit. And this chart pattern is very accurate and you're going to have a good time and rolling in the money. But it's also necessary to see that there's no holy grail, there's no guarantees, whether it's up and handle or inverse head and shoulders or ascending or descending triangle or consolidation breakout, rectangle consolidation. Most have accuracies between 75 to 85%, but 15% of the time you may still lose money, right? So there's no holy grail. There is no 100% method, indicator, price action, volume where you can make 100%. Because if that was the case, everybody would be a billionaire. We would not have any industrialists. We would all be trading these patterns by selling our flats and all our property and just going it and just doing it for a couple of days would make us or maybe a couple of months would make us billionaires and we would all be star traders. But unfortunately, that doesn't happen. So here we have a trend line here. And again, kinda, this is a trend line break here, right? So price is coming down, coming down, coming down here. And I have three touches here. Okay. So price is inside. And if I was going to be trading here, I would basically keep a entry of somewhere here, and I'm going to make it green, and I would keep my stop loss somewhere here, somewhere here I would keep my stop loss, and I'll make this red. Now, the reason why I'm showing you this chart is Price has broken through with a huge volume. Please pay attention to the volume. It's 1.8 million compared to 3.5K, six times the volume. And you've got a 5.87% overall increase. And even from the rate that you entered, you would have got almost 200 bucks because it closed at 5,436, right? You're entering in 5241. So that's almost 200 bucks, right? So now what has happened is we've got sort of a evening star pattern here. Let me zoom in. Let me zoom in here. We've got an evening star pattern here, and there price has come and hit your stop loss. There, your stop loss is hit here itself, right? On 31st October. And then the price goes up in the direction that you thought it would. So these things also happen. It's not like every time there's a trend line break, it'll go up, 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 up. Price turns around, takes out the weak players, and basically goes in. But I think I should not even say takes out the weak players because our SL is not our we didn't place our SL cheaply here, trying to increase our position size. We had a proper SL. Okay, so you should not feel bad at all if you lose money because losing money is part of the game, and as long as you placed your SL at the proper place at a proper point and you entered at the proper rate, you followed your risk management and you didn't watch your trade every few minutes like a loony. And it's okay, your SL gets it. We are going to be winning over a period of trades. You're not going to win every trade. So you should not bother about these things. You need to develop a trading psychology which will allow you to preserve your capital while taking calculated risks and make money in the market. Stock market is not gambling. I repeat, people who say stock market, uh, uh, people who say the stock market is a gamble are basically people who have blown up their account multiple times because they didn't invest in their learnings and they took trades using tips. They did not follow proper risk management, trading psychology. Before you enter the stock market, you should invest in your learning because they say the market teaches you. Yes, but do you want the market to teach you if you have to pay lakhs? What will happen is once you blow up your capital twice or thrice, you will curse the market and will never enter again because you didn't invest in your learning. You were arrogant. You don't know what trading rules are, what your setup is. You don't know your entry price, your stop loss, what is your risk reward ratio, and you don't know what is your profitability rate, what is your R multiple over a period of trades. If you don't know all these things and you enter, then you are not going to be making money. And this entry here is justified not only because of a trend line break, but also the price broke the 20 EMA. That is another confluence factor to look at. Similarly, in latent view, if you see here, where is the trend line that we have drawn? Yeah. You see here, again, it's not only a trend line break here, but going above the 20 EMA as well. I'm not saying going above the 20 and 50 because that's understood. Your 20 is running above the 50, right? Price has gone up. And for KPR mill as well, it's taking a time. Yeah, okay. From here, see here, we have taken an entry above the 20 EMA. I could have said take entry here itself at the trend line break at 758.20, but I didn't. We are waiting for the price to cross the 20 EMA also to have a confluence of factors in our favor. Now, if you like this video, friends, please like, share, or subscribe. If you haven't subscribed to my channel, do so and hit the bell icon so that you get notified when I release new videos. I plan to release 2 to 3 videos every week. I'll try to maintain it if possible. It takes a lot of time to go through hundreds of charts before I can come out with a pattern which is worth showing, and then and then I have to prepare. So it takes time, and sometimes I may not be able to release a video, but I'll try my definitely best to release at least 2 videos a week, one on swing, one on intraday, and two each, one for swing and one for intraday if time permits. Thank you all for watching. I'll see you in the next.